Welcome to another Disruptive Discourse video. This is episode 5, part 2 of what Ark Invest bought in the week of November 9 to November 13. If you haven't seen part 1 yet, then you're definitely missing out, as I covered some really interesting stocks that Cathie Wood's Ark Invest also purchased that week. 7 of them to be exact. In this second part of the episode, I'll be covering the remaining 7 stocks purchased that week, making it a total of 14 stocks purchased. Hence the need to split this into 2 separate videos. I've also covered in part 1 the other stocks that Ark Invest purchased and which I've previously analyzed, so check out part 1 for those. Now on to the next stock purchases. The first is Autodesk, ticker symbol NASDAQ ADSK, purchased on November 9 for $1.7 million. The CEO is Andrew Anagnost. So Autodesk is a software company that makes software for manufacturers. That means they cover pretty much all industries. It is certainly another company that's right up Ark Invest's streets, so to speak. Its software can be used by anyone from design professionals, engineers and architects to digital artists, students and hobbyists to unlock their creativity and solve important challenges. Here's a video that illustrates exactly what they do.
We make software for people who make things, like your car, your house, your city, and even last night's creepy alien. But that's just for starters. We also make software that talks to robots, 3D prints fashion, and folds DNA. This is software for tomorrow, because the future is coming, and it is impatient, and it most certainly won't be quiet. And it will change us all. How we design, how we collaborate, how we build, how we make. It doesn't matter who you are. We all have a stake in what's next. Because the challenges are mounting, and they'll need solutions we haven't even thought of. So it's time to get to work. At Autodesk, we give you the power to make anything. What are you going to do with it?
As for growth, the company outlines that it has a total addressable market, which in other words means the market opportunity that it believes it could potentially capture in the future, and that stands at $69 billion. If it captures majority of that market, then that certainly would be a great thing for Autodesk. The company itself has been around since the early 1980s, but has continued to adapt to the changes in innovation, which clearly stands it in good stead to progress and grow in the future. How much growth it can achieve going forward is a different issue altogether, but so far it grew at a fairly respectable rate of 17.22% compound annual growth rate. So all in all, not a bad company at all, but it's not exactly a high growth stock. It has a market cap of $55 billion, which is a reflection of its established status in the industry. As for me, I wouldn't be investing, but definitely a company to keep an eye on. The next stock is Ansys, ticker symbol NASDAQ ANSS. Ark Invest purchased this stock on November 9 for $4.3 million. The CEO is Ajay Gopal. Ansys is another software company similar to Autodesk. In this case, Ansys makes and sells multi-physics engineering simulation software for product design, testing and operation. Both Ansys and Autodesk are in the ArkQ ETF, which is the Ark Autonomous Technology and Robotics ETF. Ansys is also big on simulation, and here's a short clip from the CEO breaking down their role in the industry, especially with regards to self-driving simulation.
Build the most innovative products and bring them to markets, ranging from computer chips to rocket ships and everything in between. And we do this by helping our customers use our technology to design and test their products completely in the computer without having to build an expensive physical prototype or going through experimentation. And this helps our customers get their products to market faster and at lower cost.
You've got a lot of different clients, BMW, Ford, Baker Hughes, Cummins, all using your products
Correct.
and your software. I mean, is there one type of testing that most of them are doing?
Well, it's all different because of the nature of these products are all very different. Let's take BMW, for example. So BMW obviously is an international brand in the automotive space. We're working with BMW to help them bring autonomous cars to the market. So they're working with us to create a simulation tool chain to be able to test these autonomous vehicles. I mean, the fact is you can't release an autonomous car in the market without testing it. And the industry will tell you that it will require billions and billions of miles of road testing to validate it. 8 billion miles of road testing. 8 billion miles of road testing to validate it. You can't do this physically driving. You have to rely on simulation, and that's where we come in. We can work with BMW to help them simulate these miles so they can drive their product to market faster.
No Tesla? No.
Well, I can't talk about all of the customers we work with, of course, but we work with a number of customers.
Okay, I'll take that non-answer as an answer.
Ansys is certainly another company at the forefront of driving technology into the future. The company has grown at a rate of 15.42% year over year, which is similar to Autodesk. However, its revenue for the last 3 quarters have not been as impressive, and it looks unlikely that it would match its 2019 revenue level. For me, I would prefer investing in a company like Unity, which does something similar and has much more room to grow in comparison to Ansys and Autodesk, which are more established companies in this area. So I wouldn't be investing, but I would definitely keep an eye out on the company going forward. The next stock is Cloudflare, ticker symbol NYSENET. Ark Invest bought the shares on November 9 for $15.7 million. The CEO is Matthew Prince. This is another very impressive stay-at-home stock that has performed tremendously in this pandemic, albeit the stock price hasn't skyrocketed like Zoom has. It's a cloud security-based software company. I believe that Cloudflare has a distinct advantage ahead of some of the big players such as Microsoft Azure, Amazon AWS, and Google Cloud Services, because those bigger companies have a tendency to take advantage of smaller ones. So the smaller ones would rather go to companies like Cloudflare, who are more on an equal footing. Here is a video talking about Cloudflare and why smaller companies are choosing it. But of course, don't get me wrong, they do have bigger clients as well, such as Shopify and IBM. But anyways, take a listen.
The real privilege of working at Mozilla is that we're a mission-driven organization. And what that means is that before we do things, we ask, what's good for the users as opposed to what's going to make the most money?
Mozilla's values are similar to Cloudflare's. They care about enabling the web for everybody in a way that is secure, in a way that is private, and in a way that is trustworthy. We've been collaborating on improving the protocols that help secure connections between browsers and websites.
Mozilla and Cloudflare collaborated on a wide range of technologies. The first place we really collaborated was the new TLS 7.3 protocol, and then we followed it up with QUIC and DNS over HTTPS, and most recently the new Firefox private network.
DNS is core to the way that everything on the internet works. It's a very old protocol, and it's also in plain text, meaning that it's not encrypted. And this is something that a lot of people don't realize. You can be using SSL and connecting securely to websites, but your DNS traffic may still be unencrypted.
When Mozilla was looking for a partner for providing encrypted DNS, Cloudflare was a natural fit.
The idea was that Cloudflare would run the server piece of it, and Mozilla would run the client piece of it, and the consequence would be that we'd protect DNS traffic for anybody who used Firefox.
Cloudflare was a great partner with this because they were really willing early on to implement the protocol, stand up a trusted recursive resolver, and create this experience for users. They were strong supporters of it.
One of the great things about working with Cloudflare is their engineers are crazy fast. So the time between we decide to do something and we write down the barest protocol sketch and they have it running in their infrastructure is a matter of days to weeks, not a matter of months to years. There's a difference between standing up a service that one person can use or 10 people can use and a service that everybody on the internet can use.
When we talk about bringing new protocols to the web, we're talking about bringing it not to millions, not to tens of millions. We're talking about hundreds of millions to billions of people.
Cloudflare has been an amazing partner in the privacy front. They've been willing to be extremely transparent about the data that they are collecting and why they're using it, and they've also been willing to throw those logs away.
Really, users are getting 2 classes of benefits out of our partnership with Cloudflare. The first is direct benefits. That is, we're offering services to the user that make them more secure, and we're offering them via Cloudflare. So that's like an immediate benefit these users are getting. The indirect benefit these users are getting is that we're developing the next generation of security and privacy technology, and Cloudflare is helping us do it. And that will ultimately benefit every user, both Firefox users and every user of the internet.
We're really excited to work with an organization like Mozilla that is aligned with the user's interests and in taking the internet and moving it in a direction that is more private, more secure, and is aligned with what we think the internet should be.
Really, I don't know about you, but I couldn't help but think that the video was a massive dig at Google and of course the rest of the big boys in the space. So that could definitely be an advantage for Cloudflare and help drive growth for the company. Another growth catalyst for the company is the fact that more and more people are working remotely, and therefore companies are having to deploy cloud security, and this really is an absolute necessity in this day and age. So I do see growth here going forward and well into the future, and there's no surprises that it is growing its revenue at a compound annual rate of almost 50% year over year for the last 3 years. And just to top it all off, its last 3 quarters revenue is almost at $305 million, which has smashed last year's full revenue of $287 million. Very, very impressive indeed. This is certainly not a bad stock to add to the portfolio, and I'll be keeping an eye on this one going forward. The next stock is Castle Biosciences, ticker symbol NASDAQ CSTL. Ark Invest purchased this on November 10, 11, 12 and 13 for $3.9 million in total. The CEO is Derek Metzold. This is a biopharmaceutical company that specializes in skin cancer diagnosis. In particular, it focuses on the more difficult to diagnose skin cancers, and it has recently released the results from its clinical study, which was validated for future diagnosis. The company's testing involves the use of trained AI, which helps distinguish between benign and malignant melanomas. It was successful in its trial and looks set to be rolled out, so no doubt Ark Invest sees this as a growth driver for the future. Castle Biosciences estimates that approximately 300,000 people per year fall into this category of very difficult to diagnose. So you can see that this will be a good and consistent revenue driver for the company. Of course, that would also depend on the pricing and approval by Medicare. The company's revenue is currently inconsistent, but no doubt this would improve over time. I may add this to my ETF style portfolio on Trading212. And of course, if you haven't joined Trading212 before and you're in the UK, then you can use my referral code in the description box below. The next stock is Incyte Corp, ticker symbol NASDAQ INCY. Ark Invest purchased $6.4 million worth of shares on November 10. The CEO is Herb Hoppenot. This is a biopharmaceutical company which specializes in identifying therapeutics for treatment of cancers. There's a very short clip from the company explaining the 3 areas that the company covers. Let's take a quick listen.
When you think of Incyte's portfolio, it's divided into 3 pillars. We have a targeted therapy pillar, which is targeted towards problems within the cancer, genetic mutations or pathways that we know have gone awry and need to be abrogated with our therapies to result in clinical benefit. We then have an immuno-oncology pillar, and that is looking at the host themselves, where the cancer is sitting within the human, to try and take advantage of one's own immune system to attack the cancer and result in clinical benefit. And then the third, somewhat standalone pillar is inflammation and autoimmunity, where we've taken advantage of compounds within our own portfolio that may have importance in inflammation and diseases of autoimmunity, and use those therapies in those particular areas.
I suspect this is not the only reason why Ark Invest have taken an interest in the firm. According to a press release on the company's website, one of their drugs have been granted an emergency use authorization so that it can be used in conjunction with Gilead Remdesivir for treating COVID patients who are hospitalized in need of oxygen. This is only a temporary grant pending trials to prove efficacy of the drug. As for Incyte, its main drug is Cathie, which brings in a sizable revenue for the company, along with other therapeutics that it markets. The company's revenue grew at a rate of 24.85% year over year for the past 3 years. It's definitely a decent company, but not one in which I have a particular interest in, so it's not a company that I'll be invested in. The next stock is Zoom, ticker symbol NASDAQ ZM. Ark Invest purchased $16.7 million worth of shares in the company on November 10. The CEO is Eric Yuan. Let's talk about Zoom. I'll be honest with you, it wasn't a company on my radar until about January of this year, but this company has been around for almost 10 years. Why was Zoom so successful in comparison to other video platforms such as Microsoft's Skype for Business or Google's video platform? Well, according to Zoom's CEO, he believes that they do everything just a little bit better than everybody else, which I will tend to agree with him on. In all reality, this was just a perfect storm. It was an out-of-the-box application that was grown up and ready to take on the world. It definitely stood up to the test and was handsomely rewarded, metaphorically and literally speaking. I'm sure you've all seen the financial success of this company. It's really worth taking a closer look. The stock is up 550% year to date, which is a phenomenal price action, which even eclipses Tesla's year-to-date price action, which currently sits at 485%. It went from a revenue of $60.82 million in 2017 to a revenue of $622.66 million in 2020, which is a 117.14% compound annual growth year over year, which is extremely impressive indeed. Now, what can we expect in the future from Zoom in terms of future growth drivers for the company? Well, let's take a listen to this interview with the CEO.
Obviously, video being the new voice, but do you think about getting into traditional telecom or getting into social media? Where are the other places this business could go?
I think, first of all, our core is video and voice. We also have a platform. I think it's the best breed of service. We truly believe the best breed of service will do well. That's why we focus on the integration, a great integration with Okta and Box, Starbucks, and Slack, and Workday, ServiceNow, all those, Salesforce as well. And I think we would like to embed Zoom into other business SaaS applications. So meaning you do not need to switch the context. You still can use Zoom easily when you use other SaaS applications.
Back to you, just in terms of your vision of the future more broadly for the world. We touched on some of this, but what are some of the behavioral shifts or long-term shifts that you see in the way we communicate? And what does that mean for the industry in the world? I assume there's going to be less travel and maybe more work from home, but what other key trends do you see either happening out of this crisis or accelerating as a result?
I think you're so right on. Less travels, to work remotely will become, the mainstream. I think overall is you look at all the businesses. I think how to transform, to embrace the cloud. This is very, very important. Right? It's kind of now almost everyone is working from home, and you still have a lot of on-prem legacy solutions. It does not work anymore. Right? It will accelerate the cloud transition. I think that's very clear now.
I have to say, it's a wonderful story for the company and very much well-deserved given all of their hard work. I certainly wish I jumped on this train before it zoomed off the platform. But for now, I think the price is a little bit too steep for me. I'll wait for a bit of a pullback and then I might get into the stock. Next stock is Berkeley Lights Inc. Ticker symbol NASDAQ BLI. Ark Invest purchased $3.6 million worth of shares on November 13. The CEO is Eric Hobbs. This is a biopharmaceutical company that develops products and machinery which enables biologists to functionally screen and recover individual living cells. This helps to deliver more information about a cell's function, whilst at the same time linking that function to the underlying genomics at a single cell level. One particular use for this is to help identify antibodies for COVID-19. They were able to find over 500 antibodies from patient blood samples in less than a day in one university, so quite clearly they have a promising product there. Here's a video that gives a better explanation of what the company does.
I'm John Tenney with Berkeley Lights Incorporated in Emeryville, California, and we make a machine that the basic technology manipulates individual cells with light. So we can maneuver a cell into an area, culture it, grow it, and study it using image processing techniques. My team has been focusing on getting our machine to collect a wealth of valuable data for our customers. In particular, Amgen, GlaxoSmithKline, Roche, they're trying to produce medicines. They want to know which cells in this pool of cells we have is producing the most antibody. Which one is reproducing fastest? What's the doubling rate of our cells? We can import a single clone into an area on our chip and we can monitor that using NVIDIA and the counting algorithms we have. We can monitor its growth. We see it double. We see it double again. And we're measuring it over time. Then the pharmaceutical company then can expand the development of those particularly selected cells. What our customers in cell line development are doing used to take 6 months to be able to measure cells, measure their productivity, and select the cells that they actually want to expand and develop into medicines. Now, with our machine, they can get the metrics they need, make the decisions they need to make on which cells are working for them in a span of just a few days. In a billion-dollar industry, reducing 6 months to 6 days is very valuable.
As for the company's growth, it has only recently IPO'd in July of this year. Nevertheless, this is a revenue-generating business which is also growing. Between 2018 and 2019, the company's revenue grew by over 80%. This is definitely not a company to be ignored, and that growth has continued into 2020. Definitely one to watch and get involved with. I certainly will be taking a further look at this company with a view to invest in. My final thoughts: there are 3 standout stocks from the 7 stocks that I've reviewed in this video, and they are Zoom, Cloudflare, and Berkeley Lights Inc. But out of those 3, I consider 2 of them to have great future growth potential and definitely worth buying now, and they are Cloudflare and Berkeley Lights. But remember, of course, this is not financial advice, and you should always do your own research or seek financial advice before investing. Hope you've enjoyed this video. If you have, then do like, comment, and subscribe. Once again, thank you to all of my new subscribers, and if you haven't subscribed yet, then please do so, as this really does spur me on to bring you more of this content, which takes hours to put together. So thank you, and I'll see you in the next video.